Hey everybody. So in today's video, we're going to run through about 20 stocks. The majority of those stocks are actually going to be pretty large cap today. I am going to cover Hood and that announcement today. That's definitely important, what transpired there. I do want to go through the VAX names. I do want to cover BBIG. And at the end of this, we're going to talk about ZM, which is absolutely imploding down 10% already, and how to possibly play that tomorrow. But as always, everything is in alphabetical order. So we're just going to jump right into it right now. First and foremost, the Apple, I keep getting asked about it. And yes, today was great. Today was exactly what you've been waiting for. Increased volume, you broke out, you broke your wedge line. It's everything that you would want in a trade. My issue with it is that we've done that once, we've done it twice, we've done it 3 times. And I understand that the iPhone 13 is coming out, right? I think we're 3 weeks away, 4 weeks away, they're saying. And then we go into their big product cycle, into the Christmas season. So historically, if you look at a chart of this, right? If you look at the chart of this on let's do it on a monthly basis. It might be easier to say. So if you look at this on a monthly basis, you always look at the end of here's the end of that year. Here's the end of this year, right? Hold on, let me get to it. So you can kind of see where I'm going with this, right? See how it pops? It kind of always does that towards the end of the year. And then January earnings, it usually runs again. So there's a little bit of a pattern there with seasonality. I mean, you can even go back to here and see it. So I think that you could do it. I just want to see follow through. Today with the IWM, we're not in a follow through market. We're in where we're hitting singles. So which I'm not so sure that that's going to be the case with the large cap names, because the amount of money that it takes to move, it's hard for them to get in and out. So if you were interested in playing this, and in the community today, I didn't even mention it. I tried to stay away from it, just because we've had too many false positives. And what I would say is, if you can flip this level tomorrow, then this is probably real. Okay, if you see follow through tomorrow, that means you have more institutional pressure coming in. And that's what I would look at. But I would not, and if we just sit there and have an inside day, I would not go crazy here, because you could just base going straight across. AMD, you had a decent day until the end of the day, essentially. You opened up, you rallied. As we know, what is this bar? This is a wick, right? Wicks are what? Price rejection. So then we went below the open, and now I've got this 2 parts of an evening star. I mean, it's not really what you want to see in semiconductors, but this is what it is. So the question becomes, what do we do now with it? Well, right now, if we get to a point where we can hold this level, we should just sit, watch, and wait and build. If you take this low out, you're going to probably come back down to here, 108. So just be aware of that. I don't think that means you have to do anything with it, but just understand that that's really where you're heading to with that. So Amazon was one we took a position in today through options and did fairly well with. But just to kind of review for everybody, this is really what you've been waiting for. If you were someone that wanted to buy the stock, today was your day. If you were waiting a month like I've been, for it to finally do something. Like, this is really what I always look for with these types of trades. And I'll give you an example. Okay, that's your range, because this is the first bar, right? So let me just put this up here. So this is your range. Okay? Now, once you're out of that range, what you want to do is then you make an assumption. You tested it here, and you came down. You tested it up here, and you broke out right here. So we thought it was going to go, but then it didn't. Then it rolled, tested this range again, broke down, and that was the end of the trade. It was over, right? So that didn't go the way that we planned. But, if you set up and you know your levels, you can get another chance here. And you got another chance today. And that's why I put that trade on. I've been waiting to break this level and start filling the gap. Now, you do have some other hurdles here that are coming up, obviously. You have this, moving average hurdle, right? 50-day. You have a wedge line up here, right? And you have, to fill up to this. So, I mean, candidly, the way that we did the trade is I just did it through options, and it just made more sense to do it through options, because I'm trying to capture the move at least up to here. So if I can capture this amount of it, right, then I at least can lock that in if it doesn't work, and do fairly well with that trade, versus seeing waiting to go up here, and then, a 2% move in the equity doesn't really do it for me. So the question becomes, what do you do now? Now really you need to see it break. If you're not in this equity-wise, you need it to break the 50-day before you consider it, because then you're heading up to here, the wedge line, and then you're looking for the gap fill after that. So BBIG was a great trading stock, and hopefully everybody held a little bit or did well with it this morning. The question is that this 945 level is really where your issue is. Okay, you try to get over that pre-market, and you had massive issue with it then, and you had massive issue with it during the day. You opened, rallied through it, pulled back, came right through that level, pulled all the way back again, and now you're like a gap fill. This is pretty nasty and pretty indicative of what happened over here, right? So patterns repeat themselves. So I'm not in a big hurry to tell people they need to jump into this at all. I'm really not. So they just have to sit, watch, and wait. I would not be chasing this now. It had a chance to do a gamma squeeze, and it just didn't do it. So waiting for one, why people reposition themselves and the institutions issue, more stock, or they do a secondary. You don't know what's coming, and now they have more strike prices out there, which is dilutive to the gamma. So like it's a whole thing. The trade's changed. Sometimes they work, sometimes they don't, and even when they don't work, sometimes you can still make money off of them like that. So, I mean, that was a great little trade, and you could still make some money off of it. So I just want to address these. There's a lot of talk about what's going on with these, and the news that's coming out that affects MRNA may not affect BNTX, but it may affect BNTX. So you're seeing a lot of different news come out, and I think it's really important to understand that. A lot of what you're seeing is not in the best of light. So that's why you're seeing these stocks react negatively. This is really how it works with these types of companies. You come out, you have the great news, right? In November, this is when it got approved, right? Back here. Okay, and then we just, right after the election, and then we just popped right up, right? And then everybody was like, wow. And then we just started going. And that's what transpired, and it's just been a great run. But that run looks like it's probably coming to an end here. People that have been with me for a little bit know this trading pattern pretty well, right? What does this look like? It looks like an enormous H. So you need to be really careful here. And now you've broken the first part of that H, right? You've broken what part of it? You've broken the rising wedge, which leads me to believe that you're going to go down to where the wedge begins, which is right here, which takes you to 322. Getting to 322, you don't want to be around. If you snap that, right? If you snap that, you're heading here. Like the moving averages are going to go, you're going to go through that 50-day like butter. Like it's not even going to be, I don't even think it's going to be that effective. So this is not where you want to be in BNTX, and this is not where you want to be holding BNTX. Keep that in mind. Let these things shake themselves out. Let this news cycle through. Let people digest it and go from there. I'm not saying that people aren't going to keep getting vaccines. Obviously they are, but between Friday's, all the information that came out on Friday and what you're seeing today with Japan and mRNA, the investigation into 2 deaths, it's not good. It's the exact opposite of good. So just keep that in mind. It's definitely something that you need to sit, watch, and wait, and make sure, right, that you're not going to catch yourself in a position where we have a problem down the line. You don't want a problem. And by problem, I mean it's halted and then some more side effects are announced. Like today, mRNA, the FDA issued more side effects. It's interesting. Everybody's going through and picking a side, but these people are just people. They're trying to do their jobs. So whether they're slanted or not slanted is a different story, but they're still people. So they still have a job to do. And you saw that today with mRNA and the myocarditis news, pericarditis news, and you saw that with what's going on in Japan. So let them play themselves out. And you know what? I'm going to cover mRNA right now, just so we're done with this topic. Because it's an important topic, but I was asked this morning in the community, is this where you short it? And my response was no. And I just want to point this trade out because it's a really interesting trade for people to learn. When you undergap by a certain percentage, somewhere around 2 to 4%, right? When you undergap, and an undergap is this. I close here, right? And then I gap to here. So when you gap somewhere between 2 to 4%, okay, you need to just step away from the trading platform and let the thing shake itself out before you start shorting it. Usually what they do is that means that the market maker needs to gap it down to get themselves out of the position that they're in to take stock in, right? So in other words, he may have gone long overnight here. So let's say he's long like 100,000 shares. He gaps it down to here, right, where he finds buyers and sellers. So he can take in another 100,000 shares, average in, stock trades back up to the 8-day. What does he do? Unloads, right? So, I mean, market makers do this kind of stuff all the time. So once you understand that, you can understand the games. But my point was, I thought you'd go at least to flat, and then that would be where you'd put the short on. And that's exactly how the trade played out. If you look at this on a 15-minute, and I know I'm going out of order, but I just want to cover these now so we're on the same page, and they're done. Here's your one line, right? And here's where you were today. And let's get rid of these indicators. They're irrelevant. So here's your gap down, right? And then you reverse here. This bar fills the gap. You come here, fills the gap, and then that goes. What's this up here? Somewhat like an evening star. And then as soon as you broke this, that was it. And that's where your short should have been. That's it. Easy trade. And now you can see where you're at. So if I was long this, I would be concerned. I would not want to be long this with this kind of doji hanging there over that rising wedge that broke. Looks very similar to BNTX. And at a minimum, at least you have some support in here that might support holding this 320 level. But I would just watch this. Any rally on these, I think that you could avoid, sell into if you're long, or consider shorting at this point until this news cycles itself out. So this is when we got stopped out with a 50-cent gain after we just had like amazing earnings, and the volatility got us, and that happens. It's going to happen sometimes. So what do we do? We just look for another entry. Well, that entry is coming up, and for those that follow along in the newsletter, and there's a free version of the newsletter in the descriptions, just click on it, and it'll sign you right up for it. You can follow along with us. It comes out every Wednesday. It's very informative. So what you're seeing here, see this 80? You need to push through that. You push through that, you have my attention, even though the IWM is not doing what it's supposed to be doing right now. And the IWM is obviously the Russell 2000 smaller cap names, which this is a smaller cap name. So I'd like it to flip 80. If it flips 80, it has my attention for sure. So let's see how that goes. I do like this name a lot, and I do think that this is going to be a triple-digit stock. So it's one that I've been trying to get in and stay in, but I have parameters and protocols and processes that I follow. And if it doesn't meet those, doing this for over 20 years, I know when it's time to get out and then just get back in. It's the one thing I'll say is, and I know it takes time, but for all the beginners that watch these videos, don't beat yourself up. Like if it goes up $2, $3 and you raise your stop to break even, you get stopped out, it's okay. Just get back in, find another spot. The number one goal is to protect your capital at all costs. If you don't have capital, you can't trade. So just remember that. I mean, if you talk to any professional trader that's been around for a long time, they quantify risk. They are not trying to figure out what they're going to make. They let that take care of themselves right through their process and scaling. They're more concerned about their risk. So for me, I don't mind that I took 50 cents out and then it came down, so I felt good, and then it came back up. Well, now it's giving me a signal, and this might be the one signal that really goes. This might be it. So we're going to find out. Coin, I've been pretty negative on this, but I'm really starting to warm up to it. And I'm just looking for this right now on it. Get above that 266.50, and I may start a position. I like this name. It's really shaping up. Like from coming down to here, not breaking, and look what they've been doing to us. When you really look at it, see where I'm going with this? They're walking us up the whole time. And frankly, I haven't been looking at it because I've been looking at so many other names, particularly semiconductors, but they're just walking us up. So as they start walking us up, you have to pay attention to that. So That's why these earnings, we can get rid of these now, that's why you have to look at these averages, and you can see how they're starting to turn, right, and how you're respecting the 50-day. So I think that's going to continue. But I'd watch for that 266, and then I'd be looking for it to get up to 294, and then we have to see how it acts up here. But I like it here. So DLO, look, I just want to cover this one very quickly because I got a ton of questions about it. This is a really simple trade. Until I close over 68.71, okay, so until I close over 68.71 or until I get over 70.10, I have no interest in this trade. And if it breaks, if you're in it and it breaks this, okay, I would get out. And I would be concerned about a couple things here. There are two things that this stock did for those that are watching it, okay? You have pulled back directly to this level where these lows are, right? Bonk, bonk, and you're sitting right on it. Okay, that would raise a concern of mine. Since we've had this breakout, this is the first day you're below the 8-day moving average. This is more substantive because we don't have a lot of data. Okay, so this is a bigger deal on a chart like this than if it was on a chart with that had a lot of data points. Okay, so just keep that in mind. This is not really what you want to see. It's not a ringing endorsement. So with that said, you're going to have to kind of see what it does here. To me, I would just, I would hold off and I would honor this stop. Docs, you know, I mean, here's your pivot, right? Your pivot, you reversed. You have an evening star. After the evening star, what do? You have, right, this kind of like hammer. You know, someone was saying dragonfly. They're almost dragonflies, right? But not really. You just have like these weird little hammers. And the problem with these little bars is they just mean uncertainty. It just means I don't know what I'm going to do. But for me, looking at this, here's what I think it does. I think because I have an evening star at the top of this trading range, I think I'm going to revert to the mean. My mean is 72, which is the 21-day moving average. That's how I view it. And I view it by just very simply using, you can just use the bands. Popped out of the band, popped back in the band, broke down, you should revert to the mean. Now, whether or not that happens, we're going to have to see. But with bars like this, I would just avoid it. So I got asked a lot about Ethereum, and I just want to point this out. I'm just watching this, and I'm just waiting for this to happen. That's all I'm doing. See this 33 level? I'm just waiting for this to pop over that. As soon as I get back into that, I can start working up these bars again, and I'll have some resistance in here and here. But I think when it goes this time, it's going to go. So for those that are playing Ethereum, that's what you're looking for. This is your level. And if you look at it if you could look at the historical data, not just the future, right, you'll see it going back this far, and you'll see that level. And that's why you're having an issue. But I like this a lot, and it's definitely on my radar. So in regards to FNGU, I got asked about this a couple times today, and it's finally ready to do something. Now, we have to see if we have follow through with it, but look at this. You have a nice little wedge here that you've broken above, right? You're flipping that wedge, and now you're heading higher. Now, look at this. 39.92. So we should easily be able to run up there. Easily. And if that happens, you should be able to get to 44 pretty quickly. So I'd like to see that happen. I really would. I think it's something that could go here. Let's look at this on a daily. See the breaks right here? Look. Let's put that back in right here. And then kind of go from there. And then you flip, and then you go. And I think that's what's happening here. I think that's what you're going to see. I do. I think that's what's going to happen, and you're just going to have to give it a little time. But I think that's where you're heading. I really think that. I like this. I'm just thinking about it out loud. Like, look at how this is turning. And then we're going to do Netflix in a little bit here. And I'll show you Netflix, and you can see what I'm looking at. Globe, look, you had to get through 79.50, and you did. Now, we've been having a lot of one-hit wonders here. So it didn't really make sense to buy it today. If you get over this tomorrow, you're going to want to look at this because that means it's going to probably keep going. Okay, but you need to see the follow through tomorrow. I would not have been, this is not something I would have bought at the end of the day. It cleared, but it's just not the same type of move that I'd be looking for. I need 8180 over that tomorrow, and I'll be looking at this. What's nice about this, let me just show you this really quickly. Okay, that's what you're looking at. So, and you can actually, some people are going to argue that I should be using this, but I'm not going to. I'm going to use it right here. So best case scenario, you're going to go right to here, 85, 86. That's what you're going to hit first, and then see if you stay or go. But I like that trade. So in regards to, Hood, I just want to cover this. To me, I just think that this has just been another disaster that they sold to the public. Now, some people have actually made money with it because since it was sold to the public, it's actually rallied. It had a couple days here where it really rallied. You close here, right, at 70, and then they open you at 63. Good morning. So that's not the best. But the question becomes, what do you do with this? So looking at it, I don't know if they're going to get rid of their entire. So, the SEC's news today that they're talking about getting rid of paying for order flow. They should get rid of it. It's ridiculous. I mean, obviously they're paying for it for a reason, right? It's because they're getting an advantage over the retail investor. I mean, they're not paying Robinhood hundreds of millions of dollars because they're not getting an advantage, right? They're not just paying them just because they're nice people. They're getting an advantage, and the advantage is over the retail broker or the retail investor. So that's why I always tell people, really, frankly, don't use Robinhood, because you're literally paying somebody to trade against you and give you a bad fill. So when you look at this, the question becomes, where is it going to break to? So I actually looked at shorting this today. The problem with shorting it was this. It's very hard to borrow, right? So what they're trying to do is they're trying to protect the company. Right, so they're making the stock hard to borrow. They're increasing the margin rates on it. It's not going to save the stock in the long term, right? It's going to break eventually if this comes out. But what it does do is it doesn't put undue pressure on the stock. So just kind of keep that in mind. And remember, Robinhood's the one that had liquidity issues before when they had to halt all the AMC and everything else. So pulling out their, Citadel, I think, is 40% of their revenues. So that goes there. You talk about liquidity problems. So I would really watch that. If you could get a short off on that on any rally, I would tell you it's something that you probably could look at. Moderna, we did. I want to do Netflix. So we were watching this. This is exactly what I'm talking about. This is what you're looking for. So you're looking for follow through, right? And that's what you have here. And let's put these indicators in. So, but that's what you're looking for. Here's your downward trend line. You tried to break it. You don't. Here's your wedge. You break out of your wedge. What do you do today? Just at the end of the day, though. It didn't happen to the end of the day. But you did clear that and close here. So there's a really good chance that this goes now. There's a really good chance that this goes now. And look at the level. Here, let me just put this in on a hard level so you can see where you stopped at, right? So it was rejection here. Right? Support here, resistance, 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 right? Resistance, and now we're here. Flip this level, you're going to an all-time high. You're going to an all-time high. There's a good solid 5-6% there on a trade, very easily. And you can look at options on this too. I'll be looking at options on it for the community for sure. There's no question. I mean, if I can follow through here now with the amount of volume, and we're all seeing it. We're all seeing that it's all large caps now. So SCE got a lot of play today. I believe one of the other fintech names kind of dropped out. And so I think that's why this got a bump. So let's just get rid of all these levels for a minute so we can just see what's going on here. So this was one that, from the newsletter perspective, I came down, it shook me out in the last 2 minutes of the day. And so by the newsletter standards, I had to close it, even though we stayed with it. But from newsletter, I had to close it. I have to set some kind of parameter when we were doing the newsletter, even though the market's dynamic. So I put another BPA out there. BPA, for those that are new to following what we're doing here, it's buy price area, because some people think that, oh, I missed it at 322, so they don't buy it. And stocks really don't work that way. They're very dynamic. You can change your opinion on a stock in a minute. So looking at what's going on here, you want to see this run up to here, right? But the very first thing we need to have it do is start setting up. Well, it did that today. So if you're in this, stay in it. Leave it alone. This has a lot of potential, a lot. I've been waiting probably, I don't know, 6 months for this to happen, and it happened today. Now I'm hoping it holds, but it was definitely worth putting the trade on today. You have been in an absolute downtrend, but you've been respecting these levels, and then you kept looking like you were going to break them, but you kept getting caught, right? They kept buying the 50-day. Well, that was your sign, okay, that they wanted to be involved. And by they, I mean institutions, right? That's who buys at the 50-day moving average. So that said, here's your downward trend line. I've been waiting for this since about April. So here you are, finally. You're finally over this level, and you're above that point. So this should go. I think that this has the potential to get up to here to start in a very short period of time. I don't think this is going to take very long for it to get up to that particular level. And I'm going to just kind of show you why. I don't have any supply up here. So as this goes up, there's no supply here. So if there's no supply and I have demand, what's going to happen, right? It's Econ 101. So it will go higher. So I think you're going there. And then I think after that, I think you have a potential of taking out the highs. I really do. This has been a huge base for the stock. And whenever this happens, you can flip and you can actually head back into this channel. I don't even want to talk about where that could take us. But this company's they're not going away. People love them or hate them. I don't really care. But this is very powerful. When you've been having these breaks like this is very powerful. And it's not one of these wedges that didn't go. It's not one of these where we then had a reversal on that pattern. This opened at the low, right on a trend line. Okay, let me open this up so you can see exactly what I'm talking about. So let's open this up even more. So many people watch these videos on their phones, on their mobile phones. I wonder if iPads show up as mobile. They must, right? But see this line right here? You hit the low, bounced off of it. So what is this line now? Support. What'd you do to the next line? Broke above it. What's this line? Support. So I have some levels in here of support now. And look at this close. When was the last time we closed here? We haven't closed at this level since April. So this is a big deal. This is a bigger deal than people are making of it today. And I would focus on this tomorrow. UPST, this is just exactly what I didn't want to have happen, but it happened. We broke out, and then we just reversed. And, I have to see what tomorrow brings. But it's not what you want to see. You really wanted to see, and candidly, it's a bearish engulfing because the body is encompassing this body. It's not what you want to see. You want to see this run and turn. The only thing I would say is, stocks have personalities. This particular one seems to love gapping down and making you think it's going to break and then reversing in the next couple of days and taking out a high. So let's see what tomorrow brings, but this pattern is ugly. That bearish engulfing right on the top of this line, ugly. Not what you want to see, not even a little bit. So Z I was asked about. I just want to cover this very, very quickly for everybody, and then I want to go through Zoom and what's going on there. So in regards to these peaks, right? Zillow, there's no reason to go near this. And I just, I get concerned because and that's why I want to cover it. When you're coming down like this, you really have to watch what you're doing. And to me, I don't see any reason whatsoever to be involved in this. I just don't, unless you know something or you think an event's going to happen. But I just don't see anything, at least wait till you close above the 21-day, which you've been able to do for months, at least. But you have the 50-day here. You have your point of control here. You don't want to be involved. So Zoom came out with numbers, and their earnings and revenues, they were, I guess, in line. They were okay, but they guided lower. You can't guide lower if you're Zoom. And I'm not saying that they shouldn't be honest, but you can't guide lower. This is a very high PE, still high growth rate company. And when you guide lower like that, that's the end of it. I mean, you could play the bounces now, but when you have lower guidance on something like this, all these rallies, they become trades, and that's all this should be now. So this is really where you're looking at going. To me, I think you're heading to this 270 line. You're going to be below all the moving averages tomorrow. Now, how would I play this tomorrow? If I gap down a lot, like a huge under gap, I will look at playing it on the long side for like a quick day trade, but I am not holding it. I'll hold it and move the stop up, maybe a trailing stop, or constantly raise the stop up based upon other metrics that I use to make decisions. But I am most certainly not, holding that and building a position in it here. You cannot miss earnings if you're a growth company and not think that your stock's not going to get punished. It is. It's going to get punished. And you might not even be seeing all the pressure that this is going to go under because institutions might not want to show it right now. So just be aware of that. I think that you're going to see consistent selling in this name now. You are probably going to see some kind of bounce short term. If you're a short term trader, you're probably going to see some kind of bounce. And you can kind of see that already starting to happen here. So show you, look at this. Look at this. I mean, you can already see it, right? So you can already see it starting to happen. So it might not be the worst spot if you're one of those kinds of traders using this as your stop, because you're probably not going to break that, right? At least maybe not till tomorrow. So you're going to have to kind of see how it plays out. But I do, for a quick trade, yeah, it could be there. But in regards to anything else, no. And I always tell people to use these levels, and I strongly recommend that you do as well. The first long bar, just pay attention to where that is. And you can see, oops, let me just go up here. And you can kind of see what's transpired right from that bar over. So that's it. As always, feel free to reach out and comment. Let me know which of these you like the most, and we'll go from there. Everybody, have a great evening.